Welcome to the CEO Watcher weekly update for the week of September 22nd to the 26th. We had over 600 insider trades come through. Almost all of them are totally useless. It's our job to look through them and find the most interesting ones. As a reminder, we are looking for unscheduled and abnormal insider trades. If the insiders have a history of success, that is a big bonus. If there's multiple insiders buying, that's also a bonus. And then the price action can be interesting as well if the insiders are buying the dip in the stock or selling the rip or that kind of thing. So looking back over, we can take a look at the stocks over the past week. You can kind of see that we're actually at a much lower weekly number because we're entering earnings season. So we're gonna have, that's what all these dips are here. When you see the big dips in terms of number of buys, it's because we're entering earnings season. So we're gonna have a few weeks here of much lower insider trading because they can't really do discretionary trades right before earnings. And if you do see some insider buying right before earnings, it definitely gets a little sketchy and can be very, very high signal. So taking a look over the weekly data here, we can see we're gonna come in again for, the fifth or sixth week in a row under the median in terms of the percent of trades that are buys, meaning slightly bullish or slightly bearish, on the insider's part, but not a big deal really. Most weeks come in bearish, and then the median line gets skewed up a little bit by some of these huge insider purchase weeks, which that's when you really want to pay attention, right? When you're in the dip during, you remember the April tariff dip, and all of a sudden you see a massive spike in insider buying. That's when things get really interesting, but being a low below the line here is not really anything to write home about. We're also closing in really close to the end of the quarter here. And again, last quarter had some positive insider buying. We were above the median line by quite a bit. And then obviously the stock market went on a bit of a tear, especially after the tariff announcements rolled out, but we're going to be well below the line this quarter. Again, not anything too crazy or to get too worried about. Definitely slightly more bearish than last quarter, which does make sense. So overall, slightly bearish, nothing to worry about. Let's go take a look at some of the insider trades here. We'll actually start here. This is fine. I already have this one up with ALX Oncology because I believe the CEO here, correct? Yeah, the CEO making a $100,000 purchase at the end of last week, which is not too long ago, but stock was about $1.09 then. It's already up over $1.79, up well over 50% or about 50% already, which is obviously killer returns. But we'll remember, why did we find this particularly trade interesting? And the reason being, one, obviously just the CEO increasing his holdings by 40% is pretty notable. But on top of that, the CEO had a good history of previous purchases. As we'll just see, we can click through his insider, his track record here, which is pretty much, 1 month on average, the stock goes up 50%, up 40% in 3 months, up 170% in 6 months. So he has timed his trades very, very well, which we'll be able to see here. This one really worked more in the short term, but went from, 10 something to 16 or 17. So about 60% there. And then we can see back here, the stock like doubled or tripled, going from 30 up to, peaking up just above somewhere in the 80s or just above 90 actually, it looks like, and then getting, back up in the 70s again. So it was obviously up a ton during that as well. So hasn't bought a ton before, but when he did buy, the stock did go up quite a bit. So that caught our attention. Secondly, obviously you have the stock way down 60% in the last couple of years, and it's a biotech company, which obviously when biotech companies have the chance to release some news that can cause the stock to spike, they also, because of when the stock really mostly reacting to these big news events, when there is no news, it kind of just rides the news for quite a while, meaning a bunch of bullish momentum into a company, into a biotech company, is really, there's no reason for it to end until there's a reason, and the reason is typically an update on the trials going on. So in this case, they just released updates. It was positive. We also had them appointing a board member, decided to come down as the interim chief medical officer, which, seeing a board member take a more active role, could be construed as pretty bullish as well. If we then just take a look at the stock, it had just recently, which we can zoom in a little, it had just recently crossed over the 200-day moving average here. So, just in technical terms, that'd be upward momentum now, probably the most common momentum signal there. The stock also down still over the last year. It's down, we're almost flat now, but way up in the last few months, which normally this scares people off, right? These kind of 300% returns, but it's just positive momentum, and the positive momentum continues until there's some reason for that momentum to stop. And if anything, you're starting to see more signs of positive momentum come out because we do have price targets being raised, which they already passed that. You have the executive joining from the board, joining the executive. You've got the, estimated earnings going up, though not as useful for oncology companies here, for biotech companies. But we also have, if we take a look, which I don't actually know, I tried looking through this last time and I couldn't find it quite as much, but they basically had some positive news coming out as well, which we can see. I'm not going to read through this whole thing, but basically some positive outcomes on part of their ongoing drug trials that they've got going on. So that is good news too, which then if you read through like their earnings call, I'm sure they talk about as well some of the trials. So they have patient enrollment and they have some improvements here in some of the trials. So we have some positive news on the trials coming out, which is obviously what everybody cares about in the market. So tons of just positive momentum basically. Doesn't look like any new news came out that would cause the 50% spike in the last week. I think it's just more people, it's just the momentum kind of building on top of itself. Frankly, there's nothing really clear that's going to kill the momentum now, but it is pretty much just a momentum play. As long as good news comes out about the drugs on trial here, or about whatever their trials they have going on, the stock's going to continue going up. The second that news turns around, the stock is going to get hit pretty hard. So, or, you could also just wait and see, if you truly played as a technical trader, you could just basically put some sort of stop loss on. You could pick whatever moving average you want, and just as long as the stock is staying above that, then, the momentum is positive and you might as well hang on. So that was a pretty big win. 50% in just a week is not something to complain about, obviously. Now let's go look at last week and we'll take a look at some of the other top insider purchases that we can go through. We are looking at the week of the 22nd to the 26th. We will look at the purchases first, transaction value, sort by, and let's take a look what we can see here. So starting at the top, we have Netscope. This is an IPO, I believe. So some insider buying during the IPO. Yeah, just went public. Not really much there. Next Decade. This is an interesting one that we have looked at, I think, over a couple of weeks now. I believe it was last week, but as you can see, stock is down. We talked about this one quite a few times, so I won't go into too much depth, but basically it's a liquid natural gas developer company. They they greenlit Train 4 at the Rio Grande LNG project, which, they basically agreed on financing. And the news for them moving forward with that actually caused the stock to tank because a bunch of analysts came out and said, hey, we actually think their projections are a little too aggressive, a little too bullish. We think it's going to come in a little lower than that. And so because of that, the stock went from, in the 10s down into the 6s. So a pretty hefty 30% or so plus haircut, or 30% plus haircut there, which to me kind of reads as the investors very much handicapping or agreeing with essentially the analyst upgrades. Like that has been priced in, essentially, I guess is the best way to put it. And then you've got a bunch of insiders buying up the stock now at these lows, and up to $8 million is very notable. You've got the CEO stepping in, you've got some 10% owners, some directors, everybody kind of stepping in and buying the stock. And so I think when you juxtapose those two things, the stock already being down and kind of pricing in some of the downgrades from the analysts, and you juxtapose that against the insiders all buying up the stock while the stock is depressed prices, I think you get a pretty, just simply not knowing anything about, this is not an industry I have much experience with, it's not an industry I know much about, but just solely from kind of the game theory going on in terms of the CEO, the insider trading, and the news we have about that, and the downgrades and stuff, I think this is a pretty interesting setup because, again, insider prices already kind of been held down or already factored in the analyst projections. Insiders, though, are taking the other side of that bet basically and saying, hey, we are pretty confident what we're doing here. I'm making this a pretty bullish insider buying, in my opinion. Moving on, what else do we have here? So we have Waterbridge Infrastructure, James Crane. I don't actually really remember much about this one. Looks like it's because it was also just a new public offering and we just kind of ignore those. There's not much to do there. Private purchase agreement, not very interesting. Another Waterbridge buy, not very interesting. And now we get into a very interesting Marvell Technology semiconductor company. Very hot company, but massively underperforming, relatively speaking, as we can just see if we come here. If we take a look at some of these companies, we've got Marvell Technology, we've got them only up 13% or so in the last year. So also just recently crossed the 200-day moving average, which is pretty interesting. They crossed it one other time here before falling back below it, but technically speaking, just barely in an uptrend. However, only 13% returns. If we go look at some of these other companies, like if we look at AMD, they're going to be up. AMD has also not had a good year, but for better reasons. Broadcom is who I really wanted to look at, but whatever. We'll do AMD here because AMD, even though they're down actually over the last year, and they're actually another interesting company in that, some of their CPU stuff is interesting, but they've been kind of just getting wrecked by NVIDIA and some of the other players in the semiconductor space. But even with that, they're still trading at, if we're looking at EV/EBITDA or even EV sales, whatever you want to look at, they're going to be trading at 28 and 7. And then if we go take a look at, we'll take a look at Marvell in a second, but this is really what we want to look at. Broadcom, which is a very similar to who, would be a very much a peer to Marvel Technology. They're up 90%, 89% in the last year. Super strong momentum, obviously, earnings estimates going in the right direction, but trading at a massive 20x EV sales, 30x EV EBITDA. And then again, if we go back to where Marvel is at, we'll see them actually with very similar-ish price action to an AMD, slightly better year than AMD has had, but much lower EV sales and EV EBITDA numbers. So they're pretty undervalued, relatively speaking, compared to peers. They're undervalued while they're in a very strong position in the industry, and they've done a ton of things. So here's the one thing why, just look at the earnings estimates, which, as I mentioned, this is a company that has been struggling. It's not just the stock price that has been struggling. Forward estimates are coming down, which obviously would lead to stock price struggles, versus if we look at something like Marvel, they're way up. So this actually looks a lot more similar than to, Broadcom, which also was earnings estimates were going up. However, Broadcom's up 90% and Marvel hasn't really gone anywhere. So you have that kind of undervalued angle. You then obviously have the insider purchases that we all saw. So 4 insider purchases here, 4 insider purchases here. Their most insider buying, $2 million in obviously quite a long time here. Well, there's basically not been any insider buying. You also have the CEO who has bought the stock before and timed it pretty well with 37% insider returns. So you got the undervalued, you got the insiders buying, and then you also have, they released a couple press releases that were kind of funny. This one's not the funny one, but they announced an additional $5 billion stock repurchase authorization and an accelerated $1 billion share repurchase, which means that those shares are going to get bought up very quickly, which is obviously a bullish stance in terms of them believing they're undervalued, and it'll put some upward pressure on the stock price as they're buying a bunch of the stock. And they actually had $2 billion left on their previous stock repurchase program, and they are already just massively upgrading that and saying, now let's go to $5 billion because we think this thing is undervalued. And then on top of all of that, they did a special call, which is funny how the reasons for the call. This call was literally convened to address investor concerns and clarify the outlook regarding Marvel's custom AI silicon business. There had been some rumors about potential revenue gaps due to competition. Management wants to provide updated visibility on the data center business, blah, blah, blah. I mean, this whole call is literally them to basically just say, yeah, there's not going to be a revenue hole that you guys are worried about. And data center related growth is very, very strong going forward. So stop worrying about us. We're also we have a huge buyback. We're buying our own stock. The stock's undervalued. All of this very, very bullish in the semiconductor industry, obviously. And it's a really interesting place that you could play because of when you juxtapose, which is a word I've used way too many times in this video so far, but when you compare that to Nvidia is literally one of the most sold stocks in the entire market, the top 10 in terms of insider selling in the month of September. And I would bet if we looked at the last quarter where they're closing in on $1 billion in insider sales, if we looked at that quarter, I bet they'd be even higher up in that ranking list than just top 10. So, or we even saw another one, Broadcom, which we just directly compared as a more expensive play. We even have some insider selling there as well, with the CEO has now sold 50 million and 34 million just in the last 2 weeks alone. So you compare all of these things, the undervaluation, the insider buying, all that stuff, and I think it sets Marvell's technology up, Marvel, however they want to say it, sets them up very nicely, in the semiconductor industry. So I think that one of the more interesting insider buys that we've seen in quite a long time. Looking at some of this other stuff, we got John Barry here, CEO at Prospect Capital. One thing we just don't really like capital companies, these financial companies, all that much, but also horrible insider purchasing. So we just pretty quickly move on. Biodesics, this was kind of another fun one that we saw. I love a good turnaround play. They're much harder to time right, but they're much more fun, just from an investing standpoint. So looking historically, not the greatest, not the greatest, just not good insider buying by Jack Schuler here, which is obviously going to be negative. But the reason this story gets a little interesting, which is funny because Aspira Women's Health is also another one with a very similar story, another turnaround play, I guess is the better way to say it, that Jack Schuler is also buying in. But we can see him buying the stock, buying a handful of stock. He bought at similar-ish prices back here earlier in 2025. So this would be a little bit of a concern. Obviously, these purchases are all pretty large compared to at least the previous purchases up here. These were much smaller, and who knows what they were for, but much smaller, so much larger purchases. The stock is obviously down a ton in the last couple of years, but this turnaround probably not going to, happen overnight. But there's a very clear story for this turnaround, which is that if we go to Biodesics and we go take a look at the stock, we can see obviously momentum is not in, looks much, much worse than the momentum that we saw at Marvel, because, well below stock going down, all the momentum going down. If we take a look now at the transcripts, though, we can get a pretty quick story of what's going on here. So we're actually seeing some revenue growth, gross margin improvement. Operating expenses went up, but this is due to Salesforce expansion and R&D investment, which we'll then get into. The reason here's the SG&A went up, which again is due to the sales reps. So we're starting to see a story here of revenue and stuff growing. Looks like they got some more, or they're paying some more sales reps. So then if we come down here, they kind of talk about they restructured its sales team, and then the first full class of primary care sales reps was trained and deployed in late June 2025 with early encouraging feedback. So basically they've been paying these sales reps, but these sales reps have not done anything useful for them because they just got deployed. So obviously that was just a cost suck and not much of revenue growth, but they do have some ongoing clinical pipeline stuff too, which I don't remember finding anything coming up very soon on when those were going to be ready to go. But that'd be one thing to look at is, if they have any readouts or anything coming soon. But the main story is basically that their full year revenue is growth driven by Salesforce expansion. They're also trying to get to, do they tell us in here? They tell us somewhere their two goals essentially are their one goal is to get to adjusted EBITDA positive by the end of the year, and they're trying to do that with this Salesforce growth. So they're basically trying to grow revenue enough through the Salesforce that it makes their EBITDA positive, and that's the entire story, right? That's the entire thing that we're going to be looking for basically, which is, so we focus on three main goals: top line revenue, operational efficiencies that will result in a positive adjusted EBITDA in the quarter, and then future growth and expansion. So that's the whole thing. And it looks like Jack Schuler obviously believes that they might be figuring this out, but pretty much it's like, hey, if they hit that adjusted EBITDA goal and they're able to get that sales force to drive some revenue growth, obviously that's going to be some pretty massive upside, if those come through in the next couple of earnings calls. If they don't, this company's just going to languish forever. It's got nowhere to go. So that's a very, very clear, obviously turnaround, always a risky play and can be tough to time, but a very clear story there about why they believe or what they're trying to accomplish and what the turnaround is. What else do we have? This one was a good one that we certainly would have highlighted. The whole problem with this purchase by Richard Berry at Cassava Sciences is that the stock popped literally like the minute this trade came through. Cassava Sciences is such a popular stock, especially it was really popular because Martin Shkreli, it was like the first big pharma stock that he shorted very publicly this year. He's done it quite a few times since then, but earlier in this year, which I guess we can just see when it fell off a cliff, and he got it right. But this was just a very popular biotech stock, and then when you had Martin Shkreli getting involved, it obviously got even more popular. So now there's just so many investors paying attention to it that the second this insider trade came through, the stock was up like 25%, and this guy averages about 25% returns on his insider buys. So unfortunately, there wasn't really much we could do there. Then we've got another public offering, which we tend to avoid. $12 million public offering, some more Marvell, and then we've got another. Here's a pretty big one at Absci Corp, Absci, whatever their name is, which is an interesting one because, sorry, just looking at a note real quick. This one is interesting. So we've got a couple of insiders buying the stock here. This one being the main one, obviously $250,000 purchases with a massive 527% increase, which is also, so it's his first ever purchase by this director. Not good history for the other. So this is this guy's first ever, not a good history for this other guy that was buying the stock. But if we go take a look at a couple of recent updates from this company and why it might be interesting, they have a couple of recent, so again, this one, not really good earnings, doesn't matter so much for these clinical stage biotech. It all just comes down to the readouts from their drugs, right? From their clinical trials. So not very positive momentum, but we can kind of piece together why momentum might turn positive, which is one, we've got this, they have they call it a collaboration with Oracle and AMD to support AI-powered drug discovery, but really, who knows how much of a collaboration it is versus just them using the technology from AMD and Oracle. But you've got this AI-powered drug discovery, which is obviously a very hot topic in the market right now, and any other PR press releases that come out about that, the AI-powered drug discovery, would certainly be a positive. They also have, let's see where they had mentioned elsewhere. So one other note was that AMD actually invested in the company, which I don't know if I'm going to be able to quickly find through here. AbbVie and AMD team up. AMD is investing $20 million in AbbVie. So there's obviously another AI play there, which is semi-positive. They also expand their their scientific board here with a couple of leading dermatology experts are joining in. So you're starting to get some decent press releases coming out about why this company might be interesting, why there might be some momentum. They then have, if we take a look at their roadmap here, they should tell us the things we care about the most. Clinical pipeline progress here. Interim data for ABS 101 is expected later in 2025. So there is one potential benefit, obviously. And then ABS 201 advancing rapidly towards clinical phase 2-1-2A planned for early 2026. So the main thing here really is that by the end of the year, we should get an update on ABS 101, which hopefully is positive, and if so, would obviously help the stock quite a bit. You then have, this is a little bit longer term, but they have another one ongoing that'll get started up in 2026. And then obviously the whole AI drug discovery angle is kind of interesting, and they just have the chance to drop some sort of partnership or news or anything that could definitely help the stock quite a bit, just being in a popular industry there. So that is basically, you have some, not quite the strongest of stories in my opinion, but there's still quite a bit there. And I think just the fact that they have some trial readouts due here pretty soon with some insider buying before it, just that alone is interesting. And then you combine with the fact that you have, coverage being initiated at a $9 price target. You've got the AMD partnership. You've got some of this AI powered drug discovery news coming out. You've got the two doctors that are joining their discovery board or whatever they called it. All of that stuff is pretty interesting. They also have another pretty massive, Almirall and AbbVie expand their AI drug collaboration, which this could be somewhere in here. They mentioned it's like a $650 million, it's a $400 million company, but it's like a $650 million potential contract, which frankly they've been doing for 2 years now. And the chance of all of those working out is going to be, that $650 million would come when milestones are hit over a long period of time. So not a huge thing, but another just possible on, positive going on. So I think all of those make it interesting. And it's a pretty similar story too. I'm not going to go through the whole thing again with the other company that I am not remembering off the top of my head. Where is Arvinas? Arvinas, we got this insider buy here as well, which this is a pretty similar story, except they actually have two upcoming updates that are due before the end of the year. So this story is also a little tougher because their CEO is planning to step down. They announced a $100 million buyback, which obviously would hint that they believe the company is undervalued. However, they just had pretty bad results from a drug partnership with Pfizer. So they're going to save some costs, but the only reason they're going to save some costs is because they're basically more or less shutting down that program or out licensing it and then firing a bunch of the people that were working on it. So it was not a positive for that drug, but they have a couple others in clinical trials right now that we'll get updates on by the end of the year. So another just very similar play of like, well, let's see if some of this data comes out good. That'd be the whole play here, because long term, this company seems to be struggling a little bit. And I know a lot of investors are pretty fed up with the poor progress there. So, just basically play through the end of the year to see if some of the numbers coming out are pretty good. But I think that covers a lot of the good one. We have another kind of a momentum play here, which I guess could be the last maybe interesting insider purchase to look at, which would be at Archrock here. You can see a handful of insiders buying the stock, which is already up a little bit since we mentioned, but still probably plenty of room to go when you got, what is that, just one insider. I guess it's actually just this guy buying all of the stock. So 3 purchases, for 600 grand or whatever that's going to come out to, but they also have some positive momentum going on so as we can see, another one that just recently crossed over the 200-day moving average. You can see EPS estimates moving up in the right direction, which are both positives there. They also, I believe, so a couple other things. We have the EPS buybacks that we mentioned. Then you also have some management commentary, which maybe it'll show us here. Summary here, plus 70% adjusted net income, record adjusted EBITDA, all pretty positive here, obviously. Share repurchases here. So they accelerated their buybacks because they themselves believe they're undervalued, which is another positive. Do they tell us anything about the dividend here? They raised their quarterly dividend as well, accelerated share repurchases. Well, it tells you right here, raised quarterly dividend and accelerated share repurchases due to perceived undervaluation. That is all pretty interesting. And then they expect strong and durable natural gas demand growth driven by LNG exports, power generation, and emerging AI data center onshoring. So all of those things, again, obviously just a pretty bullish overall setup here, a pretty bullish in terms of momentum. Again, they both believe they're undervalued, but on top of that, you actually have the price and everything moving in the right direction, which which is kind of nice because that is not the case as we saw in some of those other ones where you're, buying a huge dip and hoping that the insiders are correct on when things are going to turn around. This one, you actually have them heading in the right direction and still believing they're undervalued and still believing there's more demand going forward. Obviously, being in the energy industry, a very volatile industry and also a very cyclical, and also just a lot of like macro factors that can cause some issues here, or in the natural gas, I guess. Natural gas compression is what they do, but those factors factor in, but very, very positive momentum, plus, undervalued, at least according to themselves. They say they're undervalued, so I think that's another one that's just a very, very interesting setup. We can maybe take a quick look at some of the sales. This was actually a pretty boring week in terms of selling, which just anyways, the entire purchases tend to be more interesting than sales anyway. But NuScale Power Corp here, I mean, this is one, if the stock market does start to turn around, which we've had a little bit of a struggle. A lot of these companies that we're seeing way up here at the top of the list of all this insider selling, stuff like Nvidia that has been, one of the most sold stocks. It's been in the top 10 for the last month, and it's going to be even higher. I'm sure it's even higher over the last quarter because they've sold almost $1 billion of stock in the last quarter. Tons of insider selling at places like Nvidia. You now have one of the largest shareholders at NuScale Corp selling $500 million just by themselves or $300 million, just by themselves in just this last week. And this is a company that has run quite a bit and is pretty pricey. But again, those kind of popular companies, if you're wrong, well, one, they tend to be pretty expensive if you actually wanted to short them. But then two, if you're wrong, obviously, and the momentum continues and the stock market continues to explode, those stocks are going to take off on you. But a lot of 10% owners. Pretty funny that Eric Jackson guy pumping Better Home and Finance, and then this big owner's like, yeah, I'm going to sell my $50 million after you shot the stock up 300% in a week or whatever it was. Bunch of other companies, tax selling, 10b5-1 selling, not very interesting. I believe this AvePoint was kind of interesting insider selling, except for that it's just because they're dual listing on the Singapore Stock Exchange, and this sale was to facilitate some liquidity. So I tend to believe them and think there's not much there. Continued insider selling at CoreWeave after the IPO lockup. Lilly Endowment has been selling a little bit of Eli Lilly recently, a bunch more of these 10b5-1 stuff. A lot of 10b5-1 sales, a lot of tax sales, not a ton, a lot of, selling for the IPO reasons. Not a ton of super interesting stuff here. I think maybe a few of the main stories are that you're seeing a lot of selling at some of these really popular nuclear and energy companies. So you've got like Oklo, the insiders starting to sell, including the CEO, co-CEOs starting to sell, Nvidia with a bunch of selling, obviously, NuScale Power. But all of those, I don't think, very tough to time properly selling or shorting those kind of very, very popular stocks. But worth a shot if that's what you're into and you know what you're getting into. I think you can start to use this list as the market starts to turn over to see which stocks are insiders getting out of. Might be a good list of stocks for you also to get out of, or short if that's your thing. But obviously not financial advice, and you can find all of the top insider trades for yourself at ceowatcher.com. Don't forget to like and subscribe, and we'll see you next time.